Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to give you the end of the week update on the portfolio, how it did this week. We're going to show you the purchase we made today. And to be honest with you, we did not make a purchase. We actually just dollar cost averaged into the Vanguard S&P 500 ETF that we do have in this portfolio. So that's all we're going to update. We might answer a few questions and why I didn't buy anything today. And it might pertain to my last video. And so if you haven't gone and checked that out, go and check that out. We will get right into it. So if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So the portfolio today's value closed out at $11,742.26. We're up $70.75, up 0.61%. For the 1 week, we are down $600.19, down 4.86%. For the 1 month, we're down $332, down 2.75%. For the 3 months, we're down $1,538.02. For the 1 year, we are down $162.29, down 1.36%. And for the all, we are still up. Since starting this portfolio, $711.31, up 6.45%. Didn't make a purchase today, but we do have $114.29 left in the cash account. We did dollar cost average into the Vanguard S&P 500 Index ETF with a fractional buy, closing out today at 85.25, up 83 cents on the day, up 0.98%. Holds about 4.55% of the portfolio. Our average price of getting in is $96.64, up 6.2, or not up, but we have a total of 6.2 shares in the portfolio. So we'll go ahead and show you the fractional buy here. Today at 9 in the morning, $25 went in, got us 0.292 of a share at $85.60 odd cents, coming out to $25 Canadian. So that is the purchase we made, but we'll continue to go update our dividend tracker or on trackyourdividends.com to give you guys a good idea. So as you can see, as we switch over, the portfolio on here is 11,554. Portfolio yield is about 4.04% if you were to build a portfolio today, and our yield on cost is 4.33%. Annual income coming in at $466. And the only thing we're going to be updating is VFV. So here's a snapshot of everything. So we will go ahead and add a holding. Ticker for this one is VFV.TO for the Vanguard S&P 500. We purchased 0.292 of a share at $85.60 odd cents. On the cost per share, we'll go ahead and add that holding, and boom, updated. So not a big change, but as you can see here, the Vanguard S&P 500 Index ETF, we now have 6.18 of a share. I think I'm missing one. Anyways, $6.81 in annual dividends, of course, divided up quarterly. Your yield today, if you were to buy it today, would be better than ours, as we bought at a high price and we're dollar cost averaging down. And portfolio yield is still 4.03. Yield on cost is 4.33% for us. And the annual income is $467. Now, that is trackyourdividends.com, which is completely free that you can use. But if you don't want any ads, you'll have to pay for it. I don't know what perks come with it, but it is a US site. So it doesn't do everything that works on the Canadian side. So anyways, we'll close that out and head over to share site, which I already updated here. As you can see here, this is a bit more accurate at 6.2 shares of VFV. We're down a total of $70.69. So we'll go through it. You can see a sharp drop on there if you care about the line or the graph. But capital gains here, we are down $1,559.54, which is a total drop of 11.92%. Dividends, we have $187.82, which is up 1.44%. And currency gain is $75.93, which is up 0.58%, which gives us a total return with all the numbers included, currency gain, dividends, you name it, is down $1,295.75, which is a downturn of 9.91% in this portfolio. If we didn't have dividends or US shares in here, man, oh man, down 12% almost for the year is can be quite disturbing. Why didn't I make a purchase? Well, and if you haven't seen the last video, I talked about maybe rebuilding a cash position or start building your reserves, because we don't know where this is going to go. This has been going on for 6 months now, and eventually the market will bottom out, and you can dollar cost average down as much as you can, as much as you possibly can. But eventually, like I said in my last video, you'll eventually run out of capital. And when the market definitely bottoms out, you won't have any capital to invest in the times where it's going back up, and then you miss opportunity. So opportunity cost for sure in that regards, but everyone has their own strategy and own goals. So the reason I didn't buy is yes, I'm trying to build a bigger cash portion, but not in this portfolio. The reason I didn't buy today is because the stock that I did want to buy today, I don't have enough. And that is a perfect example of why maybe for someone who's not investing consistently week over week or month over month, is to build a cash position until there's a time where you feel confident in the marketplace and confident in that stock, in that company to invest. And so it's kind of a good learning curve there. If you want to refer to the last video, please go and watch that. But yeah, we didn't have enough to buy the stock that I wanted, and just gave me the idea to do this. Now, we did have a question in regards to a stock, and I'm not one to, I know I used to on this channel where we talked about stock picks and that kind of things, but I'm trying to steer away from that because this isn't financial advice. I just want to show you guys what I'm doing for this portfolio, how I'm executing it, and my train of thought when it comes to it. But one of the questions was Tesla, which is a stock I do own, full disclosure, but not in this portfolio. And my thoughts on it at the current prices, I think it's a steal, but I'm not investing, of course. And the reason I'm not doing that is because it is a big part of the NASDAQ. It is a big part of the S&P 500. And with everything that's happening in tech right now, from layoffs to letting go of employees, cutting their staff, it's concerning that way. And if you believe in the company, if you do your research, of course, do your due diligence, as we always talk about, you might find some reasons to invest, but you'll also find reasons not to invest. And that's true for anything. You can find any reason not to invest, whether it means, oh, I don't have enough money for my phone bill. Just like an extreme example. Not enough money for my phone bill, so I can't invest this month, or gas prices are too high, so I can't invest this month, or my cat has gone missing. I don't have a cat, full disclosure. You can have any reason not to invest, but you can also have every reason to invest. And that's totally up to you. That's to answer that question that came from Laywin FPS there. You did also ask me, how did I get my name Buck Ning? Buck Ning is Ning is short for my full name, and Buck is just another word for guy. It's kind of a bad word for a guy, I guess. There's no direct translation, but that's how I got my name. I used it actually for when I played video games. It was my gamer tag, and it just stuck ever since. Used to be another one, but then I use this one. So yeah, that's where it came from. If you guys are wondering what my actual name is, Nuntanet, which is a Thai name. So fun fact for the day there. But that's pretty much it, guys. So in these times, you want to build that cash position, but totally up to you. Maybe it's not the best to start deploying cash at this point, but start allocating it to a reserve where when the times are a bit better, you can invest. Now, timing the market is not always the best. Time over time, timing is not the best, but time in the market is the best. That is a tongue twister, but you get the point. Time in the market beats timing the market. And right now, if you're trying to time the market and you don't have The risk appetite, you're just gambling, so please be careful with that. But other than that, guys, that's pretty much it for the video, guys. I don't have too much to say, but other than that, I didn't make a purchase this week. So hopefully you guys did like the video. Don't forget to leave a like, subscribe, and we'll see you in the next one. Bye.